Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hello, everyone. Today's Monday, August the 11th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Boy, have we got a week ahead. A lot of news, a lot of noise. So you're going to watch for increased volatility. My suspicion is we are building a megaphone this morning, but it's only a suspicion. I did have a sidekick assess what the volume patterns look like. And as we continue in season 3, we're really going to do a continued deep dive on how we use this to our advantage. I have been finding it very profitable and very reliable. And so what we want to do is squeeze out the parameters. I've put the updates for you on the ES and the NQ in the channels that trade the futures, and so you'll see those setups. I also have some image imprints, and today on season 3's meeting number 3, we're going to dig much deeper. I am finding these setups very reliable and very profitable, and so I want to dig in and help you assess overall. I do want to remind you that this 63 moving average down here, I know you're saying that's weird. Trust me, it's an important moving average. It's the 63. We're going to watch it for trend and momentum. It is still telling us dips or buys. I'm using the very common MACD. You can see the MACD line is moving down as we sit into a range. That tells us momentum is drifting out of price action as we hold high. This could mean a volume exhaustion pattern on the way in the near term. As a matter of fact, that's what I think it is. Now, let's take a look at the opening range today. High, 6,425.50. Low, 6,417.75. 85% of the time, Edgeful says we have a two-way break. This is occurring. How can the statistical statement, there's an 85% chance of a two-way break, help you trade? Well, it works like this. It breaks to the bottom. You say to yourself, okay, I'm going to look to the left, look for support. Once it confirms, that is failure to make a low, breach of the heavy congestion, or touch of a moving average, I can take the long all the way to the top of the other side of the channel. Okay, that's how you can use that statistical reliability on a 30-minute chart. Okay, high volume noted 30 minutes early. That's before London Open. It came in. We are breaking it here, but notice a breakdown. Buyers came in. This is the point of control. Also very important. Buyers came in, tested the point of control. Remember, point of control is the highest volume in terms of price that the price action moved in. So the highest volume in terms of time occurred the 30 minutes before. It came down here, tested that area in terms of price, and where are we? At the top of the opening range formation. Should we break to the north? Quite possibly, but there is a fair bit of resistance here. If you took the long off of the point of control into the top of the value area, which value area high is 6,419, it's time to trail that stop for long, okay? Momentum looks very jagged today, and it's mixed because price continues to move up, momentum drifts down. That gives us evidence of a sideways pattern. If you are interested, there is a setting in TrendSpider that says MACD RSI, no, that's it, MACD RSI confluence, and if you put that on, it's going to tell you, hey, things are going sideways. But a lot of times traders looking for that one indicator, they get themselves in a bit of a mishmash, not thinking about ranges in terms of volume to get themselves squared away. Remember, our mind has a tendency to jump to the easiest answer, and we've got to grind those gears and stop them dead and go, wait a second, what is this telling me in terms of volume? Okay, high edges, 6,429. Major resistance, 6,432. We're looking at another resistance area around here at 6,424, which is why I said pump the brakes on your longs, take some profit. You can always come back and buy again if it holds the range. All right, let's take a look at the NQ. Okay, NQ analysis. Let's take a look at our, first of all, let me collapse this so we don't have it there. All right, taking a look at the NQ, opening range formation, high, that's the first 30 minutes, 23,764, nope, wrong, 23,770 is the high, low, 23,725. All right, so what are we staring down? Same sort of very interesting pattern, momentum drifting down. This big volume actually occurred at 4 a.m. at the open. That's pretty important for us to stare down. Yeah, this also looks like a megaphone pattern to me, to be honest. Remember, these arrows can go in both directions. I would suspect we're going to have some kind of mean reversion event coming into the 63 and the breakout zone from all the way back here at 23,654. Okay, so what might we consider? High, double topping formation right here, and then because the statistical reliability of the double break on the 30-minute opening candlestick formation, if it breaks down, look to the left, watch for it to hold, take the long to the top of the range. Statistically, you can do that in both directions, especially if the chart begins to turn sideways and you've got a drift down on the common indicator MACD that you can also find in Top Step X. Takes it to the bottom of the range that it first gave us in this zone. Now, Claude and Sidekick have built this big box here for congestion. And as we can see, there is quite a bit of congestion. If you took the long at the point of control up into 23,751, you are coming into the target. This is heavy congestion for several hours. It is also a place to say, hey, listen, I'm going to take some of my profit off and look to see what happens in the opening range. Remember, the first 30 minutes, the size of the volume candlestick in the first 30 minutes is going to tell us whether we will move forward or come back into the range. We just need to look at that high volume area. If the first 30 minutes holds as high volume and we break out, start printing another candle, we will walk up into the key resistance areas of 23,760, 23,775. If we fade, the retest of the point of control seems very normal, but my thought is that we come in to where all that volume sat in the London Open, and that's going to give us 23,670 as the buy zone. Really, I had 23,663 set up before I went to bed. As I looked at it, missed me by both the ES and the NQ did that to me, but I would rather know that, hey, listen, at least I'm seeing exactly what's happening. I can set up another trade. The market buffet is always open, and there's always going to be something good to eat. You just don't want to pick up a green bean and grape jelly sandwich on white bread. And sometimes, if we rush it, we're going to have ourselves some ugly adds to our positions, and we're not going to like that. Okay. Lower edges, if we do come in and test that old support, again, I mentioned it, 22,650. Let's take a look at things normally for the YM. Apologies about my allergies. Of course, you know it's the bane of my existence. Okay, so what are we seeing? Let's first assess the opening range formation. Opening range formation, high, 44,365. Low, 44,311. Again, statistically speaking, 85% of the time we have a two-way break. Notice it breaks at the bottom. We get to carry the long of congestion into resistance. It breaks up above, tells us that it's likely to test the low of that opening range. Great. Here is the high volume, a statistical anomaly for how much volume is here, right? That's pretty big for the YM. And they are breaking out of it. So what do we think about that? Probably going to break through the top again. This one has the clearest signs of the megaphone pattern that I suspect, right? They're going to run stops here, up over the top, right? This is value area high, already broke it. Chances are, if we get an infusion of volume, price action events, 44,470, top of the range for the expansion zone, and then the movement back into this high volume pre-market area. When the opening volume comes in, it will likely run away from this space and create new volume events for us to watch. I want you to be careful about that. The 63 moving average really collides right into, what is that, Thursday's 30-minute opening. This is a very messy volume pattern event, but it gives us a lot of range, and we could move into this high volume node up here if price action really takes off. Okay? That's it. Volume weighted average price, 44,240. For me, I like the pullback into the low volume node, and that's really where the volume weighted average price is for 3 days. Bizarre, right? Point of control up here at 44,324. Using that as a support zone, if we're above it, we're going to see upward price action. Below it, it's got to confirm because trend is up. Remember, this MACD line, although drifting down, is sitting in positive territory. That means dips are going to be buy zones in the structure. Let's take a look at micro Bitcoin. Whoa. Let's delete all of these, shall we? Oh, for the love of Pete. Let's remove all the annotations. All right, huge breakaway, right? My thought, if you watched Market Kickoff, I said, hey, I think we're going back to 121,000. Your question might be, why? And here it goes. See this big mess of sideways pressure? Very big sideways formation. Low volume node, but the traders came through the range, created a base, and then went from the bottom to the top, which is why I called this 21,000 area. I don't like that stroke so hard. But key level to watch, all right? We've got a little bit of distribution showing here. That's pretty interesting. We'll see how it goes. Could be a topping formation. Just saying, right? You want to watch this breakout here. It could come in and fill in this low volume node at about 112,000. Good analysis last night. Super. Okay, so we just had a Bitcoin alert. Sorry. Let's go to our 30-minute chart, see what gives. Right? Here's our 30-minute formation. Very steep moving average. So, here's the thing about a 30-minute two-way break. If you've got a steep moving average, and it's not sideways, like these guys, right? You're going to see a directional hold, all right? So, good directional hold. Look at the overnight volume here. It is extraordinary. This is the volume formation. So, guess who's going to probably come in here? I prefer that to be blue. Guess who's probably going to come in here at this base? Yeah, buyers. So watch out for 120,524. That is a fairly nice pressure event to bring in the buyers. If they don't, friends, we're coming back to the 30-minute open. There is no volume sitting down here. It's supremely important. So what is the range? High 119,580, low 119,045. Big breakout, increased volume all night long. Also an article about crypto being liquidated at these high levels by central banks that own them. Not sure what any of this information means, but if I see the storyboard telling me, hey, gosh, I hate my allergies. If I see the storyboard confirming with price, I'm going to say, all right, let me look for volume accumulation regions. And that is all the way down here at 116,000, which is the point of control. Value area high and the volume weighted average price are both sitting at 118,000. I would not be surprised to see us move in that general direction. Got to watch out. Be careful. A lot of stuff going on with these commodities and in the Bitcoin space. There's some kind of storm brewing. All right. Taking a look at oil. Oil holding the bounce. We had some volatility measures from last week. They came in, gave us a good support zone. Look at this volume candlestick. This is the one that we want to consider. Here's something super interesting. It held the floor and it held the ceiling. So we're sitting in a very big range without confirmation in either direction. What do we want to look for? We want to look for a volume break above the value area high. That's 6,449. If you happen to see it, you're in good shape. Now, here's the fly in the ointment. Positive momentum, negative trend. That's a cross current. Who is master and commander? Trend or momentum? It's always trend. Always trend, because trend will give you an estimation of price much better than momentum. And so that's very important for you to look at. Pre-market volume events. We have a pre-market volume event here that is outsized. Notice the traders broke it to the north. Tight moving average, upward formation into where? Top of the last volume area, right? If they can't get there, that's a pretty bearish signal. Notice there's another candlestick with outsized volume. So something's afoot in here, and it appears to be buying momentum. All right, so my suspicion is dips or buys, point of control sitting at $64.13, value area low sitting at $63.72. That's what I am going to stare down because of the volume confluence of the pre-market candlestick formations. Okay, so, whoa, this candlestick is way bigger. Wow, that's a beast of a candle. Let me do a Fibonacci on this one. All right, 50% range. Yeah, my suspicion is that this thing runs hot to the north. But, you know, we got some deadlines with Putin, and I think that's what is going on here. Not that that really matters because, you know, sanctions have never worked with that person. So, higher levels, 64.42 all the way to 65.28. Watch your trend, folks. We got a mixed bag, right? Momentum up, trend down on the 63, flat to up on the 14. Look for the dips into the high volume accumulation areas to help you with price action. Notice the higher volume area exists at 63.90. You could take a trade at $63.90. Just watch your risk. That's all. Risk is the only thing we can manage. We have no control over anything the market does at all. We only have control over our risk. So let's manage that. GCU. No, GCZ25. Okay. Here's gold. As I mentioned, it's in a big fat fade. Notice it's coming to a key support zone. well to the left, several days old, extreme momentum. This is showing very oversold. So traders are going to come in and try to bounce it, right? And this area near the bounce zone is what they're trying to hold, right? And that number is, what is that number? Let's see. 3,400, 3,400.05. Now, what's going to happen here? What's trend? Down. What's momentum? Down. Who's going to show up first? Sellers. The sellers are going to try to assume control because of trend and momentum. Look at all of the congestion up here that we just completely lost, right? High volume area from Friday, 2 p.m., huge sell-off. Biggest volume candlestick of several days. Tried to hold the 50% range, could not do it. 3,460, still resistance. What are they going to do? They're going to try and buy the dip. Everybody's gung-ho on gold, but something's cooking, friends. I don't know what it is, but something's cooking. The entire morning has accelerated volume on the day. The biggest candlestick, really this one, though they're all pretty sizable. What are they going to try and do? Get inside of here and then push themselves to the top. My thought is the first sell zone for gold is going to be $3,427. And this was the setup that I saw last night when Jay and I were talking. I said, hey, listen, if it holds, great. But if it doesn't, it has got itself a good fade. Now, everything looked like it was going to be sideways. So the range trade was not bad, but the break of the range really gave us that downside continuation. And it happened right at 9 o'clock where Jay and Coach Paul talk about the Shanghai markets opening up. Very important about what's happening here. This is very, very important. Okay, so what do we want to consider? Opening range high, boy, I've talked a lot this morning, 3,466. Opening range low, 3,456. Well below that. Volume event right here at 9 o'clock. Breaks the zone, continuation. Commodities do not have the range break formations at 85%, quite like the equities do. They're different. They're all relative to trend, so it runs at about 55%, give or take. So that's what we're staring down. What do I suspect? If I were a betting man, I would have my sell order out here at 3,420. And that's where I would think, hey, you know what? I think these guys are going to try and sell it right there around that area. And then we'll have to watch for the conclusion of that matter. I'm very open to buying the retest of 3,406 if we break to the top of the volume area, crest it, and then pull back. Otherwise, short action, friends, in the direction of trend. Let's take a look at SPY. SPY's in a very sideways patch. Let me remove all the annotations for SPY. Let's have ourselves a look. What's trend? Up and up. But we're really far away, and momentum is drifting down, right? Highest volume candlestick of the day, unusual volume, is this one with the monster wick. So obviously somebody was getting rid of some shares, and then somebody else bought it right back up. Where did they stabilize? Point of control, $632.50. Volume weighted average price, $632.98. Value area high, $633.33. Okay, rode right back up. The highest volume candle of the prior day sits at this area between $637.27 and $636. What have the traders done? Came to the top of the range and held it. So the buyers that bought this candlestick up is now they're all trying to defend this zone. If they lose 637, welcome to the bottom of the box, 636. Where is the best long? Well, statistically speaking, it's going to be the bottom of this box at 636. If they can't hold it, the next high region is down here at the 633 area. This low volume zone, this low volume area, we could run right through it on heavy volume. So you want to be careful about that. Light and tight today, folks. Small size, watch your risk. That does not mean make your risk tight. So many of us have no idea how to set up proper risk parameters. The candlesticks tell you what the risk parameters are. And for the ES today, they're running, for the NQ today, those risk parameters are running almost 30 points wide. Okay? Watch out. Be careful. All right. I'll see you on the streams, folks. Midday Money Ball, and then our VIP session at the end of the day. Really looking forward to it. We are going to dig in. Take care, everyone.